So we have to understand where price is versus where price is coming from. This is a question you need to constantly ask yourself when you're doing a top-down perspective, because it helps give your bias on the lower time frames a lot more weight, okay? Guys, we're gonna go through a trade breakdown of the trade we took yesterday on Euro Aussie dollar for plus 10R, as it says in the title. I want to walk you guys through just the top-down perspective of the pair first, and the importance of having a top-down perspective for every trade entry that you take. Taking a look at the weekly on Euro Aussie dollar. Let's just mark out our structure, okay? So we have a high here, we have a low here, and we have a high here, okay? We can mark out our range using our fib from left to right, and we can see that we're coming from a higher time frame mitigation of this area, right? This tapped into a supply zone here, and that's why price is bearish now, okay? So we have to understand where price is versus where price is coming from. This is a question you need to constantly ask yourself when you're doing a top-down perspective, because it helps give your bias on the lower time frames a lot more weight, okay? So because we're coming from a higher time frame mitigation downwards, we can mark out this as our next important low in the market, okay? So just shifting our fib over a little bit here just to show that we mitigated this area. Let's drop to the daily to see what's going on. So on a daily, we can see that we had that high that we mitigated, and now we have these equal lows, right? Now from these equal lows, we can see that price has changed directions or changed character, right? We can mark that out with our change of character here. So price was bearish, making lower lows and lower highs, maybe a little bit lower below, and then we changed directions, right? This is our change of character. This was our invalidation point right here, okay? So it looks like from the daily that we are now bullish on this pair, and we should be looking to buy on the highest time frames from this high to this low until we get to this optimal trade area, right? So higher time frame perspective, we're bullish, okay? So dropping down to the 8-hour, we can get more information. We can take a look here. We're creating that bullish market structure that we said earlier, because we changed character some time ago. This was back in October, right? We broke these highs and invalidated the selling positions. Now, super important on your top-down perspective to mark out highs that have been ran and highs that could potentially be ran. So the next important high is right here, given where we are in price, right? It's important to mark these areas out because they can act as strong price points that price could reverse from or have like some type of reaction from. There's a good chance price is going to continue right through, but it's important to mark it out just to know where you are within the range, okay? So if we drop down to a 4-hour and we take a look at what's going on here, we can see that price is creating that bullish market structure that we expected based on the higher time frame narrative. And we have an important low to mark out here, and an important high to mark out here. This is one bullish structural leg, right? So if we can establish our range with our Fibonacci, that's even better. So we have our range established here on the 4-hour, and we're just working our way down from the highest time frames to the lower time frames. This doesn't change. This is like clockwork. This is how we look at the markets, okay? So denoting where we are within this range is super important. It looks like we had a bunch of bullish price days, and now we're having some corrective price days, right? So when price starts dropping in a bullish structural range, that's considered corrective market structure or a retracement, right? Our expectation is that price is going to be met somewhere within our optimal trade entry area, okay? We don't know exactly where, but it's going to be somewhere within that area just to have an efficient price range overall, okay? So this is the importance of our top-down perspective. We want to work our way from like the weekly down to like around the 4-hour, and then we can start looking at our intraday framework, okay? So dropping to the 1-hour, now we know where we are within higher time frame price range. We can start marking out any important intraday areas that could catch our attention, right? So what are we doing? Well, it looks like we had that bullish push up, a retracement, a mitigation of that area, and a failed higher high, okay? Very important area right here to mark. This is a failed higher high, right? This is our confirmation that price is now in a correction on this pair at this time. So this could be our change of character, you could say. And you can also mark out that this low, this very strong push from here has been invalidated, given prices dropped through it, okay? So now would be a very good time to start looking for shorts intraday based on our higher time frame perspective, okay? So we have this high marked out. We can mark out this low within our intraday framework, okay? So now we have a new structural range to work within. I want to mark out our range with Fibonacci just to establish it, okay? So now we have our range established with the Fibonacci. Some more important things we can mark out for our intraday framework is where we are given highs and lows of days, okay? So this could be our previous day's high. We can mark that out. And then this would have been the low created in New York, which would be the previous day's low. So since we're looking for selling opportunities on this pair, we want to look for our optimal trade entry areas within this range, okay? So we're going to prepare ourselves for this trade. We use mostly pending orders just because the time we were looking at the charts. It's important that we mark out any important areas within the range, right? So we have our previous day's high, our previous day's low. We also have a clean 1-hour order block right here, okay? Now this was the basis of our trade, but we did also have pending orders to mitigate any losses that we could have incurred. Granted, we were incorrect about the mitigation of this 1-hour order block, okay? So before we entered any of these trades, we wanted to see our fundamentals. A lot of you guys, the beginners, the new traders, you guys completely disregard the fundamentals. It's important that you always check Forex Factory or whatever website you like to use for your news, because knowing when news comes out can really be a catalyst in when you're placing your trade setups, okay? So before we did anything, this was our little intraday framework with our overall top-down perspective. We went over and we checked what kind of news was coming out, okay? So this was a time before Asia session began. So for me, it was like 8 p.m. EST. So all the Monday news occurred already. That's not important. What's important is what's going to happen ahead of time, right? So we had 2 Aussie dollar news folders coming out at 12:30 a.m. What time is that? That's pre-London. That's just before London session starts. Major catalysts, right? Red folders. Following that, we also have 5 a.m. Euro news, okay? So all this news is super important for the pair we're looking at, which is Euro Aussie dollar, right? Knowing that our news was coming out at that time, I was inclined to take this trade setup because it's a pre-news entry. None of you guys should be entering trades as soon as news drops. That's a recipe for disaster. What you want to do is try and get entries before the news or after the news, okay? So sometimes price will throw in, little indications that it's going to reverse. And granted, we know what an order block is. It's all over the internet. You guys can look it up for free. I do teach it in the course, but anyways, this is a 1-hour order block. This is a clean supply zone for us, okay? So what we did was we had our order pending for Asia session to see if it would get triggered. And because I'm a bit of an advanced trader, I also hedged this position. Do I encourage hedging for the majority of beginners? Not really. Hedging is more of an advanced way of managing risk, but for this trade setup, we were also prepared for if it went wrong, right? So we had to assume that there were 2 or 3 scenarios that could have happened with this, okay? We had to assume that price could push in, mitigate the order block, sign of weakness, drop in our favor. That's the optimal play for what we're looking at. But we could also prepare for price to mitigate the order block, invalidate the zone, come to our optimal trade entry area within our previous day's high and previous day's low, mitigate orders here, and then drop all the way here. Oops, sorry. And then drop all the way here to our target. Or price could completely just blow right through everything and take out the previous day's high. Now, what do I think is most likely to happen? That's the question you always want to ask yourself before you enter any trade setup. So, because our higher time frame is telling us that, yeah, we're bullish overall, however, our correction is valid, we have lots of confluences to take a sell, the likelihood of price just shooting to the stars right now is kind of low, right? We want to be looking for our sell setup, right? So how I prepared for this setup was I set my limit order here, but I also had a hedged buy order above as a stop loss, okay? So this was my hedged buy order here. My hedged buy order was the exact same lot size as my pending limit sell. So if this trade was wrong, I would have been locked in at a fixed amount to lose. And that's how I like to manage some of my trades, okay? So if this was an invalid order block to take a trade from, we had our hedged buy order there to lock in a fixed amount to lose. And we also had 2 limit orders set above the zone at our optimal trade entry areas, okay? So we had 2 pending orders here to take sells. And if price was completely wrong and we blew right through previous day's high, our lot sizes for each pending order would be calculated using the high here as our invalidation, okay? So this is how we prepared for the trade setup. There's a different psychology when it comes to hedging positions. It's interesting because what can happen is you get locked in for a fixed amount to lose, but if we get triggered for more sells and the sells are valid, the profit of those sells make up for anything that's lost along the way, right? So the profit on the way down from those sells makes up for any locked in loss here. So we could take partials and potentially just, hold one of the orders all the way down to our original profit target. So that order would mitigate any loss incurred here and then profit all the way down to our area, okay? So this is how I prepared for the trade setup. Not everyone's gonna do the same. Like some of you guys can just put a stop loss and call it a loss. That's, perfectly fine. I'm not saying one's better than the other. I've just been playing with hedging lately a little bit and I really like the way that it works with the strategy, okay? I may drop another hedging video in the course, later on, but for now I'm kind of just experimenting a little bit with it. So this was our trade setup. We can drop to the 30-minute just to see, how price played out and how we prepared for it, okay? So we had that Aussie dollar news coming out at 12:30. We had the mitigation of that order block at the beginning of Asia session, and then we had a clean push away from it. So we retested that zone and then we dropped, okay? So our target overall was kind of like the halfway point of this optimal trade entry area from the 4-hour, if you remember, okay? So let's go back to the 4-hour and you can see that price dropped perfectly into the zone that we were looking to buy from on the highest time frames, right? So this is our swing perspective of market structure and the area that we would buy from if we were taking swing trades. But for this entry, we took an intraday trade on the 30-minute. And this is how we prepared for it basically and how we took profits, right? So price dropped nicely in our favor. News played in our favor. Doesn't happen that way all the time. And that's why we have to prepare accordingly, right? So there's different ways that you can manage your risk. Like I said, you can hedge or you can use a stop loss. It depends on the trader. It depends how experienced you are as well. But basically, this is how we got into the market and this is how we used a reasonable area to take profits at as well, okay? Super important to know when to take profits off the table as well. You kind of got to play around with areas on the higher time frame to know when to take profits on the lower time frames, okay? So once take profit was hit, we just cancel our pending orders. They don't really matter. Those were like worst case scenario. And we can see that, our bias was correct. We were intraday bearish overall, and overall everything just made a ton of sense, okay? So that was the trade setup for Euro Aussie dollar. That's how we got in. Number one, we use our top-down perspective. Super important. You guys understand how that works. Number two, we create a very clean intraday perspective and framework of what's happening using the highs and lows of the day, areas that change character, areas that look good for supply zones or demand zones, etc., right? And number 3, we always want to check fundamentals to know if they're going to play in our favor or not. And we prepare accordingly, right? This was just a quick video on the recap for this trade. Hopefully you guys learned something from it. For those of you that made it to the end of the video, thank you so much. If you did find value in it, please drop a like, please comment, please subscribe. I would appreciate that a lot. My channel's still small, we're still growing, but we're gonna keep at it. Try and drop a video a week. I have a pretty busy schedule with the kids and whatnot, but we're gonna try and make it work. If any of you are looking for some free resources, I do have a free ebook as well. You can download for free, link in the description. It's just a PDF document. You enter your email address, hit enter the price is 0, and you get it for free. That's for total beginners, anyone that's completely new to the markets, wants to learn the basics about Forex. I do also have a free Telegram group if some of you guys are looking for a small community to join. We answer all kinds of basic questions, share analysis, joke around with each other. Everything's cool and dandy in that group. If you guys are interested, you can join there as well. Link in the description. If you guys are looking to learn how we trade personally, supply and demand, learn a little bit about, liquidity concepts and how algorithmic theory ties in, how price can be efficient or inefficient, a couple nuanced advanced things. We also have the mentorship in the Discord as well. That's a one-time payment, lifetime access. You can talk to me personally, anyone on my team, one-on-one mentoring, all that cool jazz. If you don't care at all to learn how we trade and you just want to copy our trade setups, we also have the Signal group. That's a smaller monthly fee. If you're interested, you can subscribe there and just copy our trade setups. I will not promise profits in that group. It's very transparent. We have good weeks and bad weeks. The trades you take and the risk you take is all up to your disclosure, okay? With that being said, thanks for watching, guys. Happy trading.